Now let's talk about how exactly to make day trading simple. This is going to be two tricks that most people just genuinely do not know. And I know these tricks work to dramatically increase your win ratio because I've out of the past 300 plus students that I've personally taught via one-on-one coaching, this has changed their game to go from when they before they started maybe a 5, 10, 15, 20% win ratio to at this point having 70, 80, 90% win ratios on every single trade that they've ever done because of these two tricks. So I'm telling you, this is going to be one of the most important videos on my entire channel that you should listen to. Now, first things first, let's talk about why most people struggle in the first place. Most people overcomplicate day trading because they use too much technical analysis or they use too much fundamental analysis. So, what exactly does this mean? If you use too much technical analysis, it's pretty clear if I ever look at your charts. I've taught people where I look before I even start teaching them, they'll show me their chart and they'll have 5, 10, 15, 20 different indicators on their screen, everything from RSI to all the Fibonacci stuff to supply and demand zones to support and resistance to everything else, and even like a custom coded indicator they got from a friend. And it's like, what is all this stuff, man? The worst I've seen was 49 indicators on one single chart, and I'm not kidding. And it's crazy. And the crazy thing as well is that the more I've noticed that was on someone's chart, the less profitable they were in the first place, unfortunately. So as a result, when you think about it, is more better or is less better? But we'll get into that. So that's technical analysis. But the second part is maybe some people have too much fundamental analysis. Some people take to heart too much on the fundamental analysis side of things. Because if you really think about it, for the most part, some people may look at the news. You may personally look at the news and say, okay, hey, COVID's a thing, so the market should be, from a SPY perspective, should be completely down by 300 points. Well, did it? No. Why not? Because that's your personal interpretation on what the market should do. Just because X bad things happening in the world doesn't mean it's going to go down. But also, just because X positive thing happened doesn't mean it should go up, right? Kind of like the screen over here. So, and if we're being really honest, test me, right? Because I've done this numerous times to test this out. Go do an earnings play. More often than not, if the market had good earnings and it's supposed to be going up, right? If they had a target to make X amount of dollars, hence means that they hit their target and then some, then ideally, when you really think about it, the market should kind of scroll up and go up and go up and go up. But I've seen numerous times where this happens, like literally on the side. It doesn't matter because that's your interpretation on what those results should mean. So, a little quote for you from myself here. So, if, and you really need to think about this, and if you need to rewind and listen to this or pause and read this. Now, if 90% of day traders fail, then why use technical indicators or fundamental analysis exactly like the people losing money? It doesn't make any sense. So, when we go back, again, most people overcomplicate day trading because they use too much technical analysis or too much fundamental analysis. So the answer is not more, it's less. So let's talk about what does that really mean from a trading perspective and a strategy perspective, and again, these two tricks that I'm talking about. So when the first piece right here, we need to identify what exactly do we need to trade because there's so many choices, right? You can say, hey, maybe I'm supposed to trade SPY. Maybe am I supposed to trade Tesla, Lucid, Zoom, Netflix, AMD, or what last time I looked it up, there's literally over 8,000 other tickers that you can actually trade. So a newcomer coming into the market, or if you're already into the market, when you think about it, the odds are stacked against you to say, which one do you buy out of 8,000 tickers? It's literally insanity. Now, for results number one, as far as how to make things simple as possible on what ticker to choose, every ticker, when you really think about it, has a different personality. So when they move and flow, it does it differently. I personally trade SPY, so the S&P 500, because of the following reasons. Because the market cap is large, right? The volume is high, so it moves very volatile in a volatile nature, but and also in a controlled way because it flows with the entire market directionally. So market manipulation is dang near impossible as a result. So the strategy that I'm going to talk about soon, it makes it much simpler because it can be volatile in a way that it can move pretty rapidly, but not so volatile that you can lose your shirt because it just ignores whatever strategy you're trying to implement on top of it. So when it comes back to this on what to trade, if you're going to choose a ticker that what you want to do, choose one. I'm telling you that's a game changer. Because think about it. What's easier, trading all 8,000 tickers, trading 10 tickers, trading 5 tickers, or trading one ticker? So leave a comment below on how many tickers you're trading now currently versus how many tickers you want to trade in the future. Right now, again, I trade one. So again, let me know in the comment section below how many tickers do you trade right now on an average basis versus again, how many do you want to start trading with me saying this exactly. But I'm telling you, if we go to the next piece, you can start winning as far as how to make day trading simple. You can win more if you do less. And if you do less, you can earn more. That's the entire game, 100%. As an extension piece to this, when you also think about it, let's say you only trade SPY. You don't have to jump and hop and go back and forth between saying, okay, SPY's going up, okay, Tesla's going sideways, Lucid's doing some weird stuff because of news, Zoom's going down because COVID's technically maybe not as crazy as it was before, so it's going down because it was overinflated. Netflix has a new subscription. AMD is fighting whatever, so it's taking some while for it to actually go up, and all the other things happening with all the other 8,000 tickers. That's too much to think about. I don't know about you, but I'm indirectly lazy and I want to trade one ticker. So use laziness to your advantage. Trade one. Why trade all 8,000? If you see it going up, you already know it's going up, and you only have to flip to another different screen and watch all 8,000 other tickers. It just makes so much more sense. And after a while, you'll get to learn its actual personality because, again, every ticker has a different personality because they flow and move differently. Now, let's talk about what strategy to trade. Now, these are not all the strategies, of course. There's hundreds, if not thousands, of different strategies because people make up strategies all the time. But just as four examples, right? There's breakouts, if you're familiar with breakouts, which is a stock breaking above maybe a previous high, and you buy it because you think it's going to continue flying up. There's dip buying, so maybe the stock massively pulls back, so you can now buy it at the low and then ride it on the way back up. There's buying based off the RSI indicator, so potentially buying once the stock is maybe oversold. And then there's supply and demand zones, which is potentially buying once the stock comes down, bounces off a zone, and you buy that retracement, if you will, back to the other side. Now, when it comes to what strategy to choose, every strategy has its pros and cons. The supply and demand strategy that I created, because I have a different variation of that strategy, but I use that strategy, works for the personality of SPY. And it does not work, as an example, with penny stocks. But I'm perfectly fine with that because I chose one ticker and I made it work with SPY. So with my strategy, I let the trades come to me and I let the trades prove to me if they're worth it or not. Nothing more, nothing less. So again, it's from a trading perspective, it's hard because you thought that in order to earn more money, you needed to do more. You need to do less. You need one ticker, potentially SPY, because it's a lot easier. I'm telling you, it's a lot easier to get in and out because the volume's high, less manipulation, and so on and so forth. The market cap is high as well, and the options are relatively cheap. $100 for same day expiration contracts. So why not if you're getting one, and you can scale that up. So choose one, and then the strategy. Choose one strategy and run with it. If you don't like SPY, great, and you want to choose Tesla, fine. That's your one ticker, but find your one strategy specifically that layers on top of it that you can trade and win. Doing this doing the combination of these two tricks makes it so, go back here, makes it so you do have less stress because you're not chasing every single ticker because it's moving. And it makes it so you can have more profit because you already know what the stock's going to do or can do because the personality of that ticker is very familiar to you because it's much easier to trade something if you've seen it move for, let's say, the past 100 days versus if you've watched 8,000 tickers for 100 days. They all move differently.